Macro Eagle, a YouTube channel that focuses macroeconomics and current trends. If you like the content, please like and subscribe and make suggestions for future episodes. Now on to the news. China's economy continued to grow in November, indicating government support is working in boosting growth, particularly in industrial output, which according to the National Bureau of Statistics grew 5.4% year on year in November. Combination of fiscal stimulus and further monetary easing arriving in early 2025, it looks like the government has early signs of success in their stated goals, which is to rebalance its economy to domestic consumption over the longer term. To Australia, with a stagnating economy, we now find out, courtesy of the federal government's mid-year budget update, that over the next 3 years, deficits in Australia are going to expand largely in childcare, healthcare and infrastructure. According to Jim Chalmers, the Treasurer, he predicts that the economy will grow by 1.75% for the remainder of the financial year, which in Australia ends on June 30th. Wage growth is predicted to be 3%, down from 3.25%. So, with an election to be called likely mid-next year, with a slowing economy when adjusted for inflation, continued deficits as far as the foreseeable future, it appears to be all uphill for the Labor Party trying to convince the Australian populace that it's managing the overall country well. Next to the US and the Federal Reserve, the Federal Reserve announced a 0.25% rate cut to the markets and forward guidance of further cuts in 2025. This led to sharp falls of over 1,000 points on the Dow Jones Industrial Average, leaving the market perplexed. The logic is, if the consumer is strong, unemployment is low, then why is the Fed cutting rates? Are the banks exposed to commercial real estate in trouble and need lower funding costs to survive? I guess time will tell. This led to further market sell-offs in European and Asian markets, following the general trend down, and it appears that even on the third trading day post-announcement, markets are still falling. To India now, the fastest growing big economy, is expected to grow 6.5 and 7% respectively over the next 2 quarters, which are enviable growth rates that even China can no longer match. India, although is still considered to be far behind from a development point of view as compared to China, but has far better demographics pyramid, which means more young people, therefore more sustainable growth over the next few decades. Still, with a lot of potential, India is suffering currently from high inflation, poor infrastructure investment and rampant political corruption, which are big themes to resolve over the long term. To Russia, the current global antagonist in the Western world, for obvious reasons, is also experiencing a slowing of its economy, together with rising inflation and interest rates. As an example, butter, a key shopping item in Russia, has increased 30% in 2024 alone. Russia is by no means a small economy, with a GDP of $2 trillion US dollars equivalent. So even in a country that has enormous mineral resource wealth, it just shows the wartime spending is very inflationary, and in the end the real cost is always paid by the poor middle class. So that's it for this episode. Many thanks for watching, guys. Stay tuned for future updates. Eagle out.